Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Thursday edition. We're at the Thursday. That's right, tail end of the week, getting the aftershocks from Jerome Powell and the FOMC meeting today, and not the best follow through by any means. Today, we're not going to dive into the minutia of the markets. We're actually do it much higher level. As you saw from my write up today, one of the things that I gotta say kind of irritates me, having been a teacher for so long, is you get students all the time that come in and they'll just show me how to make a ton of money. I just want to make a bunch of money. And a lot of people circumvent or try to get around having to do any work, right? Like, just sign me up for a stock picking service and I'll go on Wall Street Bets or Reddit chat room and follow some 14-year-old kid who has no clue what he's doing because apparently he made some money. That's the wrong way to do it. And if there's ever any hope of having longevity in this business, there has to be a plan, much like a business. And sure, Elon Musk with Twitter and Tesla and Jeff Bezos with Amazon had a plan and a roadmap that they were looking to follow in order to achieve their goals and their plans. Well, for us as traders, it should be no different. There should always be a plan in place. And unfortunately, early on, I didn't have one. It took me several years to actually sat down and really mapped out the full-on business plan and trading plan aspect, which we'll talk about as being two distinct separate pieces. And you guys have heard my perspective on this. I know we talked with other traders about a trade plan, but my guest today actually has a course on a trade plan, and he's been on here a couple times in the past talking about his strategies, etc. So today we're going to focus on building your trading plan with Ryan Watkins.
And it really was just shooting from the hip, trying to figure it out. And it was very frustrating, in fact, because there was no plan, no real rules involved. I mean, it was really simplistic, just using technical analysis. But even when I learned that, there was so much still to figure out, still so much that I didn't know. And so it was really, I don't remember when this actually happened, but a lot of time went by before I realized, I really need a plan of action here. I need to get my thoughts organized, get it on paper, so I know what I'm attempting to actually do, as opposed to just say, hey, let's just turn on the charts and let's just, start pushing buttons based on whatever I feel at the moment. And that went on for a long time. And at some point I looked at my, my trading results, and it was a downward trajectory. My equity curve was just, slowly getting lower and lower and lower. I'm like, this isn't right. I'm going the wrong direction here. And if I keep doing what I'm still doing, I'm going to get the same results, which I didn't want. So something had to change. And I didn't know what it was at the time. And I would realize, it was more than one thing that I needed to change, but the trade plan was definitely one of them. And it got to this point where I remember doing a lot of research and trying to figure out, okay, well, what goes into trade plan? I've never done one before. I don't even know where to start. And I actually think that that's why, one of the reasons anyway, why a lot of people don't do trade plans. They just don't know.
Well, it's boring too. It's boring too. Like, you're right. I didn't know where to start, because again, when you were on our, mind you, when Ryan and I were on the floor, it was wild, wild west. It was literally people coming in with 50 grand, 100 grand. One guy in particular had $750,000, and you get the basic education of here's the tools, technology, and now just to kind of turn you loose. And that was the very beginning of Online Trading Academy. So, I can't fault them for that. They were still figuring out how to build trading education. But I sure as hell didn't have a trading plan. I knew my mentor when I started, he'd be like, well, this is how level 2 works. Here's how you send some orders and make sure you don't lose a lot. Go for it. Like, oh, okay. Well, I mean, that in essence was kind of the cornerstone of the of my trading plan. But, it took me, I would say, probably 9 months to a year before I actually sat down with a pad and paper and said, okay, here's my plan. And mine's similar to yours. Mine was this horrible downward decline in, it wasn't steep. It was just like, I'd have great days. Like, I've one day where I'd make 10 grand, and then all of a sudden I'd lose 3, lose 4, lose 2, lose 1, lose 3, lose 4, lose 2, lose 1. Next thing you know, I'm down 10 grand. Like, hold on a second. This isn't right. I mean, I was right one day out of, 7 or 8. And I think I'm a good trader. So it was I guess, out of necessity, but also out of just observation, which I always encourage everybody to always analyze your trades, because you'll never know what you're doing wrong if you don't look at it.
Yeah. And that actually was a big turning point for me, Merlin, is so my background, big sports background, football and other sports. So I tried to relate it to what I knew. So I said, okay, how can I relate trading to sports, specifically football for me? And I thought, you know what? Okay, what do we do in football? Well, we practice, we lift weights, we study game film of our opponent, things like that. I'm like, okay, does any of that translate to trading? And what I found is, yeah, some parts do. And it was incredibly helpful. This one thing in particular, in fact. So, kind of take you back when I was playing football, what we would do is we would watch game film or video of our opponent. And I played on the defensive line, so I would study the offensive line, especially my opponent that I was going to go up against in the game. And I wrote down exactly all his tendencies, his habits, his stance, his movements, his everything I could think of, so that in the game, I knew exactly what he was going to do. He's going to block left, he's going to block right, therefore I'll do this or I'll do that. I knew just by looking at his stance what he was going to do and where the offense was going to run the ball or pass. And I'm thinking, okay, that was really helpful for football, but how do I translate that to actually trading? So what I started doing is, well, let me just try it. So I started studying the market, not just trading, wildly, like you said, Wild West. And you're exactly right. That's exactly what it was. Let's just go for it and see how much money we can make. And it didn't work out so well.
Turned out to how much money you can lose.
Yeah, exactly. And so once I started studying the market, then I got better. I got more astute about it. But then I started studying myself and my trading habits, my decisions that I made. And one thing that I would do, I call this the trade grade. And this is one of the things that really helped turn my trading around. And I fully believe it will help anyone that does this. I've seen evidence of that myself and for other people that have done it. And it goes like this. When I was not just playing, but I was coaching football as well, when I would sit my players down and we would critique the opponent, I would grade that. I would show them how to do that. So by the end of watching that video, I would have basically a prescription. I would say, okay, so-and-so, here's what you need to work on this week. And then the other guy, here's what you need to work on this week. Here's your strengths, here's your weaknesses. And every single week I would give them that scorecard so that they would know what their strengths are. So they keep doing that. And we need to do that as traders as well, know our strengths so we can continue to do that. But we also have to know our weaknesses, and we all have them. We're human, it's the way it goes, but we need to understand them so that we can overcome it and find solutions, or at least mitigate those weaknesses. And so this trade grade was exactly that. It's basically, okay, let's just take 100 trades, for example. I'm going to track those 100 trades. I'm going to take screenshots of it, print them out. I'm going to draw on it, write on it, or however, someone learns best on that. But that's how I did. I'd print them out and I'd draw on it and write notes on it. And then you get an Excel spreadsheet. I would type in on that spreadsheet, win, loss, but not just the win, loss. It was my habits. Like, am I actually following my trade plan? Did I analyze the trade correctly based on what the trade plan says I'm supposed to do? And, was I identifying trend correctly, identifying the area I want to buy or sell correctly? Am I managing my trade properly? Am I getting my entry and exits and stop losses correct? All these things. So we know this as traders, whether you're new or been around for a long time, we need to be doing these things, good entries, good stop placements, good targets, manage risk, all that type of stuff. We know that. But unless we build a habit to actually do it, what are we really doing then? Mm-hmm. We're always building a habit for something, whether we realize it or not. We're building a habit for something. So our habits need to be in the right trajectory of improving our trading. And that trade grade was a huge turnaround for me, because after 100 trades, when I would grade my progress, I would see specifically, wow, there's my weakness right there. I didn't even realize it. And in those beginning years, my biggest weakness was trade management. I would move a stop too quickly because I didn't want to lose the profit that I had. Or, when I bought, I would sometimes just move the stop up really, really tight to the entry. I'm like, I don't want to lose. And what would happen? It would just stop me out anyway. And I'd lose small, but I would lose. I never let that trade mature towards its target. I was freaked out, fear of losing money type of thing. I never would have known that unless I tracked those results.
Right.
So by knowing my weakness, now I can start thinking of what are the solutions. Okay, well, that's a whole nother discussion right there. And you analyze it and say, what are the solutions? Well, I could do this, that, or so on. And all of a sudden it started improving little by little by little. And I would find other weaknesses. But trade management and the exit, those were my big two weaknesses. And it was psychological. It was like I knew where to exit. I knew what I was supposed to do when managing my position. I didn't do it because I was an emotional wreck. I didn't want to lose money. Fear of losing money, fear of missing an opportunity. That was another big one I had to battle as well. But again, I never would have known it unless I actually tracked the results. And it doesn't take long. You do it for like 10, 25 trades, you start picking up patterns real quick. Like, oh, I didn't manage that trade, or I got into early. Why did I get into early? Well, that was a fear of missing an opportunity. So I just jumped in because I didn't want to miss it.
Right.
Now you've taken on double or triple the risk in doing so.
It's funny because we're all going to have little things. It's interesting that you talked about trade management being your weakness. Like mine, I don't think trade management was mine at all. Mine was I was ignorant to and I'm going to use this football analogy here. So there's certain times of the game where players have more energy, right? Obviously near the start they're going to be more energized, and at the end they're starting to tire out. The trading day for me is kind of like that too, and I'm sure that you have this incorporated to some extent, which is that opening rush of the markets. You get all that volume and huge emotion. Middle of the day kind of flattens out during the doldrums, and at the end it picks back up. And I'd have days where like I'd be up $10,000, and you're going, okay, I'm doing great, and by the end of the day, I'm up 1,000. I go, hold on a second, what on earth happened? And I would analyze it, and I actually found that I make almost all my money. Made in the past tense, all my money in the opening hour and a half and the last hour and a half. And I said, well, hold on a second. Market's open for 6.5 hours a day. Here's 3 hours worth. So I have 3.5 hours where I'm actually losing money on a regular basis. I have 3 solutions. I can either cut that 3.5 hour window of the market out altogether. I could do the heavy lifting work, the due diligence, and try to figure out how do I turn that 3.5 hour window into positive behavior. Or do I just continue to do the same thing, right? Which is be stupid because I'm losing money. And I ended up just cutting that window out. But I would never have known that if I didn't look at the trading results. And I mapped out very in detail. I mapped out what I was trading, the times I was trading, the share size I was trading, and I mapped out over the course of a day. Now, I don't need to do that today because I'm not as heavy of a day trader as I used to be. I mean, that was just insanity back then. But, being a swing trader, I still need to look at are there specific days of the week where I trade better? Are there specific, months that I trade better? And what are my personal strengths and weaknesses? And if you don't analyze it, again, you will never know. And that's the hardest part, is figuring out what those pieces are. It's just observation. And I'm glad you got your trade management piece, because I think that's an easy solution in my book.
Yeah, on paper it really is. But the emotional side, like this is just me at least, and it was fear of losing money. And so that was a big struggle for a long time, in fact. And now I think trade management is one of my things I do really well. It's just, I don't even think about it. It's like, oh, move the stop. Okay, move it again. Okay, move it again. It's just automatic now. But it took a long time to get to that point. And it was a struggle for me. It was rough. And like you said, when you're day trading, identifying what do I do well and what do I not do well? Well, the stuff you don't do well, cut it out. I was doing a trading event somewhere, like a meetup group type of thing. I had a gentleman come up to me and says, Ryan, I got this problem. First of all, take a number. Who doesn't have a problem, right?
Yeah, get in line.
But he says, I got this problem. I'm like, what am I, a psychiatrist or something? But, he's like, I make thousands and thousands of dollars in the first 30 minutes. I think he said like 10 to 30 grand in the first 30 minutes of trading. But then he says, but when I keep trading, I end up losing it all. What should I do? And I'm looking at him like, wait a minute, did you just ask that?
Yeah, hold on. It's like saying,
let me turn that around.
Yeah, my finger hurts every time I smash it with a hammer. What should I do?
What should I do?
Hello?
So I actually just asked him the exact same question, like, what would I do? And he says, well, stop trading. There's your answer. Stop trading after 30 minutes. And he says, yeah, but I want to trade.
No, it's not that he wants to trade, Ryan. It's not that he wants to trade. How much did you say he made in the first 10 minutes?
It was like 10, it was the first 30 minutes. He'd make anywhere from like 10 to 30 grand.
Okay, let's say he made 10 grand in 30 minutes. That means that he's making $20,000 an hour. There's 6.5 hours in the trading day. That's $130,000. That is what his brain is saying. It's not that he wants to keep trading. His brain's saying, dude, if you keep going, you can make 130 grand a day Don't
Right.
stop. And I know this personally because I was a victim of this early on.
Oh yeah. A lot of people are.
Yeah,
Especially
absolutely.
like we saw on the trading floor, And so I just asked him a question. I says, do you want to trade or do you want to make money? Which one? Pick. You can have one or the other. He's like, what do you mean? And it's like, it's simple. You're already making money the first 30 minutes. Stop. If you want to keep trading, then that's like an addiction or something. That's something else going on there. But if your job is to make money and you do it in the first 30 minutes, you're done.
Yep.
That's it. You're done for the day. If you want to keep trading, go on simulation and go trade to your heart's desire, but stop trading live at least in the first 30 minutes.
Talk about let's talk about the separation, because I think that you preach this as well as I do, that your trading plan has kind of like two chapters to it, right? There's one that's your here's why, who, what, where, why, and when I'm doing this, and then you have a more detailed piece that's like this is my actionable, physical executing trade plan strategy. Walk us through why that's so important for you.
Sure. Yeah. So really I'll call it two categories. So the first category is really more of a strategic trade plan. That's big picture strategy type of business plan ish type of document really. So it's more broad based, more general trading and investing information, definitely more big picture point of view. And it covers everything really from A to Z, trading or investing related. And it's really more of a large document with chapters. You could have a risk management chapter or, stuff like that. So that's more, I call it on the strategic side, big picture vision. The tactical trade plan is different. It's more specific. It's very focused and very much to the point. In fact, the tactical trade plan, there's no real long sentences or paragraphs. It's even just bullet points. It's just boom, 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 real quick and right to the point. And it covers everything that's needed to execute the trade. So for example, that would be the trade setup. Let's say maybe it's just a multiple time frame setup, like 2 time frame, 3 time frame setup, where you have my trend is this, my supplier demand zone is that, and you put it together. So that's your setup. Maybe it's a breakout trade or whatever setup someone wants to use for that. And then you have, what is my actual entry going to be? And it's got to be specific. We don't want to say, well, I'm going to enter kind of in this area. That's too vague. Be specific. Exits, be specific. Where and when will you exit the trade? Under what conditions will you exit the trade? And then, of course, the position size. How will you position size the trade? And the stop loss. That's under exits, of course, not just exit for profit, but exit for a small loss as well. So it's things like that. So it's a small document. It's a 1-pager, even a half page. It could be, where you have a picture of the actual setup, like a visual representation, and then the bullet points of the more specific things. And that is, getting back to the trade grade, that's what you want to track.
Yep.
So let's say you have that tactical trade plan, and then for the next 100 trades, or let's just say even 10 trades, you're going to track that. You're going to track your trade setup. Well, here's my trade setup. Here's the picture of it in the trade plan. When I place that trade, you'll take a screenshot of it. Does it match what's on the actual trade plan? And it's either a yes or a no. Okay, it's like, well, it's a kind of sort of. Well, if it's a kind of sort of, is that really in your trade plan? Okay, so is it specifically looking like what's in your trade plan? It might be off a little here based on the candlestick. That's fine. That's not what I'm talking about, but it needs to be identical to what you're trying to do in the trade plan, the setup. Was my entry, the actual entry that I traded, the same that was on my trade plan? And then, the same questions for the exits and the position size, stop losses, all that stuff. Now you go forward and you track that for, 10 trades, and your weaknesses and strengths will quickly start to bubble up. Now you might say like, well, my setup was good. My entry was solid. I got 10 out of 10 on my entry. Oh man, I only got 3 out of 10 on my position size. I'm not position sizing. That's a weakness. Well then, okay, now we know what to fix.
Right.
We're not going to improve as traders unless we know what our weaknesses are and fix them. Trading is a skill, not a knowledge. We all need knowledge, but this is a skill business. Trading is a skill. So how do we increase our skill? We need to really focus on not necessarily learning more, gaining more knowledge. I'm guessing most of your viewers have more than enough knowledge already. You take a course from here or there or whatever, you got the knowledge. Now develop the skill. It's one of the most important things traders can do is skill building.
And the
That's
tough
part
part
of the trade plan.
Totally, yeah, and the tough part is, and you're right. You have all these different schools, and some people. I don't know. I've looked out there, and I think some people are teaching a bunch of garbage, but there's a lot of people that are teaching some really good stuff. And the hard part is, who's got the secret sauce? And I don't know if it's necessarily a secret sauce. It's how you take that education and then apply it and then review it. So, I look at the education I learned at OTA early on. It's a small portion of the way that I trade today. I think that the content has evolved over the years, and it's much more my style. Part of it is finding what is your style and where's your temperament in the marketplace. As Ryan will tell you from my old trading days, I'm a fast-paced, high-energy type of trader. I'm not the sit back, relax, and just chill as I am today. But back in those days, I was much more high-speed. So I had to tailor my trading plan to fit that type of attitude, that high-energy, neurotic, always got to be moving type of person. I think that a lot of people out there, they will just take somebody's course and go, okay, this is it. This is the secret sauce. Well, you know what? Apply it. Eric asked a good question here, Ryan, which I'll get your take on it. He says, what's a good sample size to test a trading strategy? And I'll leave it there. He says you started off a 10 trade sample size, and to me, 10 trades is not enough. That could just be a market for a week. I agree with Pepe here. He says, I'd say 40, preferably 200. I'd go 100. You need to have a lot of data in that set, and the key there is you can't keep changing the things you do on those 100 trades, right? Apply the strategy, then you can go back and take 100 trades and evaluate it. But is it more or less for you with regards to the trade size or testing a trading strategy?
Yeah, it's a great question. I would say 100's a great place to start. It really is. But I would track it in 25 trade increments. Okay, so every 25 trades, you review it and say, is there any glaringly obvious weaknesses that I need to fix immediately? If so, do it. Okay, but to make any major structural changes, I'd say, yeah, you really need those 100 trades, because there's different environments, 100 trades in different market environments, uptrends, downtrends, economic climates, all that kind of stuff. It's good to get a good solid sample size. 10's not going to be enough. That's just more for a quick little, demonstration type thing. But I tell my students 100 trades, track them in 25 trade increments. And we have an Excel spreadsheet that does that, where it has all the rules, and they just fill in, yes, I did, or no, I didn't. And after 25 trades, they have a really good idea of, hey, I'm doing okay here. I'm starting to see some strengths. I'm starting to see some weaknesses. It's just, I don't have enough sample size yet, but you can start to see the trend develop. And maybe by 50 trades, you're like, I'm kind of starting to see a theme here. Okay. So, but if there's a glaringly obvious thing, like let's say you do 25 trades, right? And of those 25 trades, only 10 times are you using a stop loss. That's a major issue. You need to correct that immediately. You're not going to get to 100 trades if you keep that up, right? So that's what I'm saying is, if you see anything that's really dangerous or critical, that needs to be fixed immediately. But overall, 100 trades, I think, is a great way to go.
In the early days, as you're doing this, obviously there's this propensity to jump from stock to stock or market to market because something might be more exciting. In the early stage of development of a trading plan, would you recommend that somebody stays with one thing or hop around?
That's interesting because from my experience, I hopped around a lot. I mean, it was, when starting on that trading floor, it was like a rabbit, just hopping from technique to technique, tactic to tactic, strategy to strategy, indicator to indicator. I was all over the place. And for me, I didn't know any better at the time, but in doing so, I learned what works for me and what doesn't. So that process was good for me. It took a long time, I think, to get to the point of, here's what I do. I know what I do and I do what I do. And it's almost like this tunnel vision, and all these other strategies out there. It's just like, hey, that's nice. Nice seeing you. I'm focused here. I'm on this path. And it really reduces the distractions. So I think for traders, it might be a different path to where they get to that. That was my path of just confusion and try this, try that, try everything until I figured out what works. And for me, bottom line, it's swing trading is where my sweet spot is. The day trading was always more challenging for me. Position trading, I like it, but it's just too long of a period of time. I get bored. Swing trading is that nice little sweet spot of, a few days to a few weeks of trade time frame. I love that, but it also gives me, it's more suited to my personality. I'm a little more calm and laid back. I want to be more analytical and identify, from more like a sniper mentality instead of a machine gun mentality. And that just fits my personality more. So I think, for anyone asking themselves that question is really, first you have to ask the question, who are you, your personality, and what trading style fits your personality? I think that's where the starting point of that question needs to come, is just ask, everyone needs to ask that of themselves. And that will help you get to that point much quicker.
Yep, absolutely. Another interesting comment that was made here. Well, I'll piggyback off the first one about trading one security hopping around. From a trader's perspective, I think, Ryan, you would agree that like every security is its own living, breathing entity. I mean, when you trade Microsoft, you're trading against the Goldman Sachs, the Merrill Lynch, the Morgan Stanley traders at those firms, and it's the same guy that's trading Microsoft at Morgan Stanley is trading it every day. So you get their characteristics. And that's Microsoft may move completely different than Apple because it's made up of different traders. Now, certainly we could look at the news and external events. I would recommend for anybody who's starting out, especially if you're in your first year or so, stick with an ETF, stick with something like SPY, which is very diversified so you don't get caught with some earnings announcement that completely screws you like Amazon did the other day or Meta and Facebook. Go with those ETFs and make sure it's got enough liquidity. To the question here from Michelle says, would you do that in sim or live trading? Absolutely live trading. All right. This is a very crude comment right here. I apologize if this is rude, but trading in simulator is like reading a Playboy magazine and saying you've been with a member of the opposite sex. It's not the same thing, right? You got to get in there with real money and actually trade. Therefore, you feel the pain, you feel the emotion, but just do it with 10 shares, right? Start small. So if you do get burned, okay, I lost a couple of bucks, no big deal. And then if you have that test subject of, let's say, SPY, right? And you trade that for a month or two and you put in your 100 trades, you now have a great data set because the underlying piece hasn't changed at all. It's the SPY. Whereas I trade Apple or Microsoft, Intel, Cisco, there might be different personalities there and my strategy may not work well with every one of those. So I would say stick with one. I think it's a much easier place to begin with and find out what your mistakes are before you jump in with big money. Like my crude example.
So, it's interesting. With the live or sim, I would say maybe, I don't know, however many years ago, I would say, no, start on sim. But because, the stock commissions are basically nothing these days, you're not really paying anything commissions. So that excuse is gone. I would say start on sim to learn your trading platform.
Totally.
To make sure you know what buttons to push first, how it works, how to change orders, all that stuff. So I would say as long as you know that stuff first, get on in sim and just start pushing buttons, practice how to send orders, how to cancel orders, that type of stuff. You need to know your platform. I'm not going to put my own money at risk just starting out, not knowing how to use a platform. I wouldn't do that.
Mm-hmm. True.
I want to know the platform first, then go live. And like Merlin said, even just one share, it's live. It's real money. And it's amazing what that does in your mind, the psychology, the mindset, trading real money versus simulation. It's a wild difference there. So again, one share, 10 shares. And even, when Merlin and I were teaching the courses at Online Trading Academy, we would have our students go live on 10 shares. And that's not much, 10 shares. It's not much at all. But, at least when I was teaching, we'd start the first day or two just getting in there and drill on how to use the platform. I come from that football coaching mindset of drill. Okay, now it's game time,
Yeah, I would 100% agree with that. If you make mistakes on the platform when you're stressed and got a big trade on, that is the worst. It is absolutely horrible. So yeah, sim until you understand the platform. But when you buy something in simulator, understand that is not real. When Ryan and I started, if let's say the bid price was $10 and the ask was 11, so you have a dollar spread, right? And if you wanted to, you could buy it instantly at 11 at the ask, sell it at the bid for 10. You could go into the software and say, I want to buy it at $8 and hit the button and sim. Oh, you got it. And you're like, oh, wow, I'm up 2 points already. It's like, no, that doesn't happen. So you get this false sense of how easy it is to make money. Or here's the real reason I love simulator. When you have a bad losing trade, you just hit the power button, turn it off, and that trade just goes away. Whereas in real time, like, okay, now I have to deal with this thing. Like, this is an actual live trade on. I got to make sure I manage this one. So I think you should always start in real mode because you get the emotion. And as I've seen here in the chat, the tough part about this is the emotions will take over. And I think you need to desensitize yourself to the emotion. Start with one share. Right now for equities, it's free commissions. I saw a bunch of people saying here, do the micros. You could certainly start with the micros. That's a very small price point as well. And then only progress once you start to prove to yourself through documentation, through your trade plan and your trade results, that you're getting more consistent. Not necessarily that you're making money. That to me is not the end all. It's that you're being consistent in making money, right? Those are two very different things. Ryan and I could tell you dozens of stories where we've seen a guy who he had one monster winning trade and then lost hundreds of his next 100 trades. That doesn't make a good trader. He got lucky.
Yeah.
Ken says, my hands were actually trading my first trade. It took both hands to move the mouse. Hopefully that if you got that nervous, Ken, from one share, that's pretty nerve wracking. But back in the day, there was a guy on the floor, Adam, in one day, as one of the more active day traders I ever saw, he did 10% of Dell's trading volume in one day. Just to put that in perspective, 10% of Dell, and back then Dell was trading 60 million shares a day. He did 6 million shares himself. I mean, those are some huevos rancheros right there. But net, the guy was a losing trader. He had great up days, but wasn't consistent and would have huge down days, which is part of the reason I'm such a stickler for trading plans. I put in the thing, if you don't know where you're going, any path will take you there. Your trade plan's critical. If you don't want to do it because you're lazy, do it. You can learn about trading plans in a lot of different places. Ryan's got a class on trading plans, so that might be a resource for you as well. Tell me more about your course. What is it, a 1 day, 2 day, 15 day, a lifetime? What do we got?
It's actually self-paced, so it's up to the user. It's up to the trader how quickly they want to go through it, or if they want to take their time through it. But it is a full and complete master class. It's not just a quick little 2-hour thing or whatever. It's all self-paced videos, high quality video. I have tons and tons of documents to download, such as my own trade plan template. So, and that kind of gets back to what we were talking about earlier is I don't know how to do a trade plan, that excuse. And I've solved that for them. Like, well, here's a template. All you have to do, follow the online, self-paced course and just type in your answer. I've made it as simple as I possibly can for people in that. And, I also have in there the tactical trade plan that I use myself in my own trading. And again, it's just a template, just plug in your own personal, things that you want to do on there. But I think it solves a lot of problems. And, Merlin, we've seen this for, how many years now? People, they just don't know how to do a trade plan. So they don't, or they're just too lazy and they don't. So the laziness thing, that's a personal issue. People got to work that out, But as far as not knowing what to do or how to do it or how to structure it, all that's been taken care of.
We've got a few people here that I know personally have built out their trading plans, and I think they can attest to this. But, it takes some time, it takes some effort. But if you really want to be serious about it and you plan on doing this for the rest of your life, which is probably the best thing about this as a trader, I'm going to be 90 something years old making equity options for cryptocurrency trades. Why? Because I can do it from anywhere. And depending on my speed at that moment, I might be a little slower at 99. I may be more of a position trader, but I can still...
Be an investor by then, Merlin.
Yeah.
A value investor or something.
Yeah, typically, I might be a little... But it's one of those things that I don't have to worry about my employer going, you know what, you're too old. We replace you with this new college graduate that's got 6 PhDs. It's like, that's not going to happen. PBJ asked a question. He says, I trade futures with entries and risks. do you have a certain ways that you enter for the ES versus Russell versus Dow versus gold? I guess just different futures. Do you always enter on a 30-minute, for example, or are you looking for the same setup?
For me, it's not so much a time frame issue because you can use the same setup in different time frames. Day trading has the same setup or swing trading has the same setup. But for me, being predominantly a swing trader, I'm using really the higher time frames, not really 30-minute charts so much for the swing trades. So for me, it's monthly, weekly, daily, and 240. That's the time frames I'm using to set up my trades, the chart patterns I'm looking for, and all that kind of stuff. Now, as far as entry goes, it's really just where do I want to buy this thing? At what price? I want to buy it in an area of support or area of demand. That's the entry, or a sell zone, resistance, supply for the short side of it. So it's really quite simple and straightforward. But that trade plan, the tactical trade plan, has all those time frames in it as well. So I know exactly what time frames I'm looking for and what I'm looking for in those time frames. I'll give you a hint here. I'll just narrow it down for you. There's really two things. And these two things are, I believe, one of the most important two criterias in any technical side of a trade, like technical analysis. That's number one, location. Okay. Where do you want to enter and exit? And number two, direction. So when I'm scanning for charts, I'm looking for those two things. What is the direction and what is the location? Okay, so the direction is just simply your trend. Is it up, down, or sideways? That's it. Real straightforward there. Is it up, down, or sideways? And then I want to see, price traveling like a pullback or something like that into an area, a location of where I want to actually execute the entry on that. So those are really the two primary factors. There's more. I mean, there's a lot more involved, but that's kind of the elevator pitch version of that. The two things that I'm predominantly looking for on a chart.
Yeah, and I have to add there, PBJ, like I'm not saying that I always have to execute on a specific time frame, right? And I may look at something as a longer term swing trade, I may look at it as a position, I may look at it as a shorter term trade, and I do have time frames that work well for me. And I think that's the key point here is you have to find out what time frame works well for you. I mean, Ryan and I, we cut our teeth on the short term side of things back in the late 90s. So I have that ingrained in my DNA a little bit, is this kind of short-term attitude. That said, I don't use 1-minute charts anymore. I used to use a tick chart, and then I moved to 1-minute charts. Now, my shortest time frame I'll generally look at is a 5-minute, and I do a lot of executions on a 5-minute, but it doesn't mean I always do it. And if I'm trading gold or S&P, NASDAQ, Russell, Dow, and I'm mentioning futures there, they have their own behavior patterns, right? So gold is going to move much differently than Dow, and obviously like Dow's move much differently than the Russell 2000. So I'm still going to apply the same rules. As Ryan, mentioned several times, that tactical trade plan, you have, here's what I'm going to do, here's how I'm going to enter, here's how I set my stop losses. It's in the basic variables of trade management. I'm going to apply that the same regardless of the symbol. Now, if I'm trading something like lean hogs or live cattle, it's going to be a little bit different. I have more risk in the underlying instrument itself versus my trade plan on top of that. So I need to know about those things. But if you're trading equities, I'm going to treat everything the same. I'm going to analyze, how much it moves using ATR, things like that. That helps me determine stop losses, using for the supply and demand zone. So I would treat them all the same. Now, Alan says, should I have one trade plan for each ticker that I'm trading or one plan for all?
So how I do it, I have, okay, first of all, so the strategic trade plan covers pretty much everything. Okay, broad umbrella, everything, the tactical stuff's under the umbrella. So for the tactical trade plan, you have one tactical trade plan. That's the setup that you're looking for. Okay. And then you can plug in whatever symbol you want in that tactical trade plan. So you might have gold on one trade, boom, 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 boom. And then a day later, like, oh, now it's the S&P, boom, 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 boom. And it just flows through. That way you can trade any ticker symbol you want and any market you want, futures, Forex, stocks, you name it. And it all falls under that tactical trade plan. Mm-hmm. Now you can have more than one tactical trade plan. I do. So I have one primary setup that I really heavily focus on. That's my bread and butter. But I also have a second tactical trade plan that's a different trading style. It's a different method. Okay, so just an example. My bread and butter is more of a reversion to the mean pullback trade. Okay, so for example, uptrend and it pulls back. I want to buy the pullback in the context of an uptrend. Okay, so that's one example. That's one tactical trade plan. The second different tactical trade plan is a different method. So that would be more of a momentum breakout style. That's going to have different rules. It's going to have a different setup with it too. I can't, do a breakout in a pullback. That doesn't make any sense. Okay, so those are really the big two that I'm looking for. Okay, then you can get into, well, how do I want to actually trade that setup? Do I want to buy shares of a stock? Do I want to buy contracts if we're trading futures? Or do I want to use options? For me, for being a swing trader, options is an incredible way to go because it solves so many potential issues that might come up. So I'll give you an example right here. And again, this comes from studying your trades. So one thing that I would learn in studying my trades is I'd have an entry. So I'd buy, place my stop, and then I'd get stopped out only for the market to rally and head up higher anyway. I'm like, man, I missed it by like 2 ticks or 2 cents. It stopped me out. And that stop out was the low of the day. And the thing just rallied. I would have made money if my stop was just a little bit lower, that type of thing. And so in studying my trades, I found out, I'm kind of getting stopped out from time to time. And the market just goes the direction I thought it was going to go. How do I solve that problem? Well, option number one, don't use a stop. That ain't happening.
Yeah. Nope.
So option number two, move the stop further. I'm like, well, yeah, now we start getting into lower position size. It's going to distort the return, the ratios and stuff like that. So I'm like, well, okay, that's a maybe, but is there a better solution? And then I started looking at options and it's like, whoa, this solves that problem big time. And now it boosted my win ratio significantly. It went up. I don't have the exact numbers, but last count up 78% win percent. That's incredible with really high profit factors too. Yeah. And it's like, wow, that comes from studying my trades and just asking myself the question, what's the problem? What's the solution?
Right.
Now, you might not know the problem immediately. That's why we need to test and figure that out. That takes a little time, maybe, X number of trades. The solution, sometimes there are easy solutions like, oh, if I just do this, then boom, that problem goes away. Sometimes they're really simple solutions. Sometimes it takes some real rigorous analysis to find that solution. It might take a few weeks or months to get to the solution. But once you find the solution, the trading gets improved.
Yeah, significantly. I'm slowly working on getting the audio back. I actually know what the mistake I made was, everybody, so I can fix the audio. It was my fault today. I did things out of order. Eric asked a great question. Eric, thank you for the contribution. Also, I got to give a shout out to a few others here that have made contributions today. Alan and Chase, thank you very much for the donations. I do appreciate that. Eric asked, for futures, do you think the daily curve, 240 for the trend, and the 1 hour at 15 and 5 for entry is okay, or is that too far apart?
It might be a little far apart. I would say more importantly, you got, daily curve. So you're looking for those big, supply and demand areas right there. 240 for the trend. So nice little intermediate time frame right there. Although just keep in mind, if you're using the 240 for the trend, it is more whippier. So just, for everyone, just keep that in mind. It's not impossible, but it's just a little more volatility in that. And then the 1 hour and the 15, I think would be, or I'd actually go more like the 30-minute. But I'll say this, though, it really does depend on that trader, what their personal preference is. And I would say don't use a 1, 15, and 5. Now you're spreading yourself all over the place. Just pick one and get really good at that first. And then over time, you can start using these different, time frames. And I say that because if you look at a 1 hour chart, and let's say you got, I don't know, a demand zone on a 1 hour chart, like, there it is. Well, what does that look like on a 15-minute chart?
Right.
Because there's still demand there. It's just a different perspective. And then you change it to a 5-minute chart. And it's going to look completely different than the 1 hour at this point, but there's still demand there, isn't there? It just looks different because now you're on the 5. So this is kind of my point is you don't need multiple time frames for your entry. Just pick one, get to know that really well, whatever that is, And then that's your baseline right there. Because it's like, I don't know if you guys still use like time at the zone. I don't know, like your odds
Yeah.
enhancers.
Yep.
You guys still use that? Okay.
Yep.
So for example, let's say you got a 60-minute chart and you look at there's 3 candles, whatever, in the base, right? Well, what's that going to look like on the 15 or the 5 or the 30 or the 22.5-minute chart? There's still demand there. It's all a matter of the perspective, the time frame that you're using. So if you stretch that to 5-minute chart, now all of a sudden you have tons and tons, dozens and dozens of candles. And you're like, well, that's just too many candles there. That's a 5-minute chart. Of course, there's going to be a lot of candles there.
Yeah.
It's like, come on, man. So when you flip it to 1 hour, you're like, aha, now it's the one I want. No, it's the one you want from the start.
Yeah. Yeah.
So just pick one that you're comfortable with that meets your style. For me, I love the daily chart for my entry. Now, I mean, that might just be because I've used the daily chart for almost 3 decades now. I love it. And I've grown really accustomed to using it. And I like the daily chart, how it flows and moves. And it's also more of a swing trader too, of course. So it just makes a lot of sense to me.
I agree. Eric, I like the different timeframes that you're using. If you're starting off, I agree with Ryan. I think it might be a bit much. Those timeframes you have there, that's exactly what I look at. So I have on my computer, I will have 10 different charts, and I have an indexes on the top, right? So I'll look at SPY or QQQ on the top. On the bottom will be a stock from that if I'm using equity markets. So let's say I'm trading Apple, which I can't trade Apple, Microsoft. Microsoft would be on the bottom. On the top would be, let's say, the NASDAQ. And so I go daily, I have the 4-hour, I have the hourly, I have the 15, and then on my mission control in the center, where all my execution is, I keep a 5-minute chart of both those. So, but I've also been doing this for since 96, so 26 years, and I've looked at millions, without exaggeration, millions of charts. So I'm comfortable very quickly glancing. I think someone starting off, it can be overwhelming to have that much information. So, I would say pick 1 or 2 time frames, get comfortable with those. I agree with Ryan. I think that the daily is where you should start. I mean, that's the big picture. That's the driving force for most of those smaller trends anyway. If you find that you want to be a day trader, okay, well, you could look at that daily and maybe you whittle it down to your second time frame, be a 15 or something, just to see what's really going on within that daily candle. But if you're new, and I don't know how long you've been trading, Eric, but I wouldn't overwhelm yourself with too much visual stimulation. You really got to focus on the price chart, put out your tactical trading plan. Say, here's how I set my entries, my stops, my price targets. Put 1 share on the line and get comfortable starting there, and then evaluate and reevaluate. So, Ryan, you mentioned something before the show about a trade plan review. Do you want to share that with everybody?
Yeah, sure. So I've never done this before. We'll see how it goes, but I think we might get a couple volunteers, and I'm happy to do it. I think, Merlin, you and I both agree that trade plans is a critical part. It really is a critical component. And there's a lot of people out there struggling. They might not know how to do it or whatever. But I'll give an offer here. For those of you that do have a trade plan, like written out, Word document, send it to Merlin, and Merlin will get you the email address. He will pick it at random, 2 people. Okay.
You're doing 2? Oh, wow. You stepped it up.
2. Yeah, I'm feeling generous today. I will go through your trade plan line by line, analyze it, critique it, write my comments in it, and say, did you think of this? What about this? How about this? This looks good. Nah, this doesn't look good, and here's why. I will give a full critique of it. And now there's a catch, okay? The catch is, number 1, it's got to be in a Word document so I can, type in my comments next to it, okay? Number 2, the other catch here, the other criteria, you got to send it to Merlin. He'll randomly pick 2. And the third catch is, I will come back in about a week or 2. Merlin and I will work on the date here. I'll come back and we will critique it. I'll show the results live on air. So you got to be willing to do that. Now, some of you are like, well, I got private information. No problem. Just redact it. Okay. Just take out your personal name if you want. It could be completely anonymous if you want. No problem with that. You can take out your
no account numbers,
information, all the personal information. If you want to take that out, not a problem. Just leave it blank or redact it or however you want to do that, or put in a fake number. That's fine too. Okay. And then I'll make my analysis and critiques on it. I'll come back. Merlin and I will schedule a time in about a week or 2, and then we'll go through it line by line. And that way everyone else will benefit from it as well. Because a lot of people don't know how to write one. And so for people that already have written one out, you'll hear some feedback, and I'm sure Merlin will give feedback as well.
Absolutely.
Because he's got tons of experience.
I can't resist giving feedback.
Exactly. And so Merlin will help out as well. So I'll submit that offer to you guys. I do this as part of, my company. It's kind of a really a mentoring, trading, education kind of company there. I help mentor people and coach them and stuff like that. And so this is one of the services I provide on there. And so I'll leave that up to your audience. Merlin, what email should they use to send that to you?
Let's see. I'll put mine up here. Your audio is going to get cut off for this piece. But if you go to TraderMerlin@gmail.com, that's where you can email it to. Again, pull out any personal information. Ryan and I have zero interest in knowing your bank account numbers or anything like that. That's, just get rid of all that stuff. Just delete it from there. But what you should include in there is, here's my starting capital, right? Or just so you can gain a sense as to what are the expectations that you're setting. If you're starting with $50,000, you think you're going to be making $100,000 a month, we have a problem right away, and Ryan and I will land-base you for that one. Mike says, what if I don't have a trading plan? Look, let's do this. I will give you until Tuesday, because I want to get this done. We're probably not going to do it next week. We'll probably do it a week after. But if I can get him to Ryan by, let's say, Wednesday, that gives us a week roughly to go over these two. I'll give you until next Tuesday to write out a trading plan. It doesn't have to be a perfect work of art, but get to it. As you make your plan for this weekend, Mike, is sit down, listen to what Ryan was saying, map out a trading plan, and say, okay, here's how I'm setting my entries, my stops, my targets, and we'll go through it. It's very generous offer for Ryan to do this. I was kind of surprised when he mentioned it, but hey, it's a nice value added. So email me at TraderMerlin@gmail.com. Send your Word documents. You mentioned it's got to be in a Word document so we can edit it out. You have until Tuesday to send that to me, so you have all weekend. And then I'll literally just take the name of whoever it was. I'll put them all in a hat. I'm just going to draw it out at random, 2 people. So there's no preferential treatment here. I can even record the drawing if you guys think I'm cheating or something. We live in a world, Ryan, where there's not much trust going on. So
you need to record it on Zoom Live.
Right? Something. Yeah, I'll do a live stream of selecting it. Because Ryan's microphone's not... actually, let me real quickly do this. I'm going to bring over to the side screen here and share your website. And I'm going to also hopefully paste this right here. Hold on a second. Tell me about TraderTactics.com. I think you can speak over the video now.
Okay, great. Yeah, so TraderTactics.com, that's my little baby right there, and it's growing little by little, but it's getting there. Right now, I have a trade plan masterclass. It's someone asked the question, what if I don't have a trade plan? I got that solved for you too.
Yeah, right.
You can click on the products and services link, and I believe I even have some free videos and some free samples of what that course is like. And I also recently put in there under the products and services a consultation. And for anyone that just wants, say, like a 50-minute consultation, it's $99, and you can go from there. I'm not going to upsell you on anything. It's literally just, hey, me helping you for 50 minutes. You talk about whatever you want. If it's maybe trade plan help or trading, whatever, you got some issue in trading that you need some help with, no problem. I can help you out with that. And then I also put in there under the free section. There's 100 resources in there for free. It's just basically a download. You can download it for free. There's tons and tons of resources in there. Some of my personal favorites that I use in my own trading, as well as other ones that I've used in the past that I think are very valuable. And so that list will continue to grow over time, but there's 100 different resources in there now. And then of course, there's a blog and a vlog, and I got some more master classes coming up. Hopefully the second one will be done by the end of this year. That's my target date on that, but there's more to come.
Tough being a family man and doing all this stuff. So,
yeah.
Well, thank you for coming on. I apologize for the audio at the beginning, everybody. That was my fault, but we managed to pick up and get things going. And Ryan, thank you so much for the time and effort, and honestly for offering out 2 free trade plan evaluations. I think that's a pretty impressive freebie out there. So thank you very much, and I'll be in touch with you probably next week, like on Tuesday or Wednesday, and I'll let you know which trade plans was drawn, and we'll you and I will both sit down and try to figure out how to make these better.
I'm looking forward to it. Sounds great, Merlin. Thanks, everybody.
Right. Take care, Ryan.
Bye.
Yeah, that was Ryan Watkins of TraderTactics.com. Again, I apologize for the audio stuff. I had problems today, and there is his TraderTactics.com. I had the website up there as well for you. Yeah, I'll fix the audio stuff. That won't be an issue. Now, I would really I'm sure your viewers are trustworthy. I doubt SS is a viewer. No, Sam Side just leaves me alone, as he should, because he knows that he is a guilty party and whatever. He is just whatever. He's just one of those people you just shake your head at and go, how do you survive? How do you make it in this world knowing you're the type of person that you are? But then you get great people like Ryan Watkins, who I've had the privilege of trading next to for a couple of years on the floor out in Irvine. Just know he's a down-to-earth, good person who's always trying to help out. And, Ryan and I have the same basic mentality, which is when Ryan is out there helping with his trade plan review, which we'll probably do in 2 weeks, and I do that same thing, it helps us. It makes me a better trader because a lot of it is going to reinforce my discipline, my understanding of risk management, etc. And hopefully you guys can learn from that. So great offer for Ryan. Again, you can email me. It's on the screen. TraderMerlin@gmail.com is where you can submit your trading plan. Attach it, remove any personal information. Obviously, if you want to keep your name on there, that's great, so we can make it a part of the discussion. But I would definitely encourage you to take advantage of that. That's a pretty big deal out there. Now, I'm going to have to wrap up here because Big Eb, he's been quiet, but we're at a 1-hour show, and I'm sure he's going to give me a hard time for doing a 1-hour show today. Here is what's happening for tomorrow. Berkshire Hathaway reports earnings, Dominion Energy, Duke Energy as well, but it's really about the economic calendar. As you can see here, a ton of stuff happening for Europe for tomorrow's trading activity, and for the U.S., average hourly earnings, non-farm employment change, and the unemployment rate, which they're expecting to jump from 3.5 to 3.6%. Have to wait and see what this number actually comes out at. Again, Jerome Powell's kind of been setting that stage for higher unemployment going forward. We'll see if that ball starts rolling up that hill with the new number coming out tomorrow. So, sorry we didn't get a chance to run through all the markets, but hopefully you enjoyed that session with Ryan. He's a good guy, and glad I got him back on. Hopefully we'll get him on in 2 weeks to go over the 2 trading plans, which I will select at random from those of you who send it in to TraderMerlin@gmail.com. If you have any other comments, questions, suggestions, put them down below the YouTube video. That's my favorite place to answer questions because I think it helps my channel. And of course, hit that like button. I'll see everybody tomorrow. Take care.